Okay, so welcome to another video. In this video, I want to talk about analyzing GBPJPY. So there's something interesting I've seen lately, and it's the fact that most persons think, oh, if you see a buy narrative, you must take it. If you see a sell narrative, you must take it. But overall, it's always important to look at higher time frame. So I always start from higher time frame. Now, if we're looking at this current time frame, which is 23 hours time frame, there are some details we are going to see that you won't see on lower time frame. And now the good thing about this is it gives you the idea and the overall direction of the market. Now, what I'm saying here is the market is very, very bullish. So it's going to be so unwise of me to just look for bearish entry. But then again, it's possible for me to be buying and selling at the same time. But be careful, because if you trade prop firm, there are some prop firms that don't really allow you to buy and sell the same pair at the same time. So even if you're swinging the buys from below and you sell from at the top, right, it's not really allowed. Now, implementing the strategy we use, which is obviously the range theory, which is a very, very, very simple methodology of trading, which is a strategy I got from Wyckoff theory. You have to get basic understanding of how Wyckoff works, understanding the accumulation, distribution, and all that. So we see this as a mitigated range at this level, which for this is a type B, because that is like a continuation type of entry. So then again, if I was to give you like a brief understanding of what I mean, let's say a case whereby we see market doing this, we'll have the bearish market movement, and then we'll see this aggressive push to the upside. Then we'll have this. So in this case, we have created two ranges. This is the first one, which is going to be a type B, type A range, because it's found at the bottom, and is the reversal type of range that was created. And of course, we'll always look at the last candle, bearish candle, regardless of what candlestick was formed. We're focused on the last bearish candle. That's our level for entry. So we'll always mark it out like this. Then for this case, also we'll look at the last bearish candle, which is also our entry, and this is our next range, and this is type B type of range. Look, if you go over the videos I've posted before, it really explains this in depth. So then again, if we're expecting price to come back into this level like this, mitigate this area, and then push back to the upside, we're simply saying that we're expecting market to come back and then mitigate, push back to the upside, because that is a range that I want to see market react from. Because indeed, if market is bullish, it's supposed to like react from this range. All right. So if I replicate that, also we have this. Now, the fact that I have multiple ranges doesn't really mean that, oh, I have to take both. Now, in most cases, I have to look at the trend. Is there a possibility that price will go so low, or there's more possibility that price will continue higher? Right. So these are important things we want to focus on. And that's exactly what we see here. We see this as our type B, and this was a type A also that was already mitigated. Okay. So this is type A range that was mitigated. And if we're to point that out, it will be like this. I'll mark out the range like this, and then call it type A kind of range that was created. But then again, to get a precise entry on this, you could always go to 5 hours or even 10 hours, and then you'll see that, okay, this is the last bearish candle in this context, and then we'll see that breakout of that level. And then what happened? Market really came back into that zone again after breaking before pushing back to the upside. So we'll have this marked out. This is advantage of looking at lower time frame, but most cases, even though you look at lower time frame, you have to be very sure of what you are doing. All right, because if you're not sure of the strategy you use, you don't have so much confidence in it, you'll miss out on a whole lot of setup. So this is the last bearish candle in this case, and you see how market just reacts off that level after coming into that zone. Price didn't really waste time to bounce off to the upside. For taking this, this would have been your trade. This would have been your stops. So just put it on the low of the black candle. I'm not really interested in, if it's created a week below. This is a sweep of previous candle wicks, which is like acting as liquidity sometimes. So this is one thing I do. I just take that setup like that. Then the other one you had was this also, which mitigated. This was type B kind of entry. And all this have been mitigated previously. So that's why I'm using the green box. And what do you see again? The same exact pattern repeated over and over again. The good thing about this strategy is once you have like a precise understanding and in-depth knowledge of what you're doing, you'll be able to utilize it very, very well. And I'm actually going to draft a course for my current mentees on this, but that will not be now, probably later on in the year. But then again, the concept and the idea behind it is so simple that you don't really need to stress yourself on looking for what should I do, how should I enter, and all that. look at the patterns. The patterns repeat itself continuously. You just need to sit down, have a good thought process. Okay, if market is going to do this, what should I expect at this time or at this level in the market? All right, that's quite important. Now, if I was to look for the next possible entry, I'll come to 2 hours time frame, and I'm looking at this. I'm interested in buying at a certain level. For this case, I'm interested in buying at this area here because this is yet to be mitigated, but I could always go to probably 1 hour or even 45 minutes, correct? To get like a more precise zone. So on 45 minutes, this is what I have. I would refine into this level. I would want to take out this area like this. So I don't know at the time I will be posting this if price has mitigated this zone or not, but definitely I'll try to post this as early as possible on the YouTube channel. It's been a while I posted. And so this is what I want to see. This is my prediction. I want to see price come back into this zone. All right. Come back into that level. Because we had this mitigation previously. So we're still in that bullish bias. Let me just take this off. Still in the bullish bias, expecting that, okay, market is going to push back, mitigate, and then continue higher because the market is still what? Bullish. Now, another thing you have to reference is structures that have been changing all this while. We have liquidity at the top, right? We have buy side, sell side liquidity. Every area of liquidity is being targeted because if you're looking for buys, you want to expect price to take out every possible scenario or every possible level that sellers are likely waiting to sell the market from. Same thing for buys. If you're looking for buys, you have to ensure that you're targeting to the top. If you're looking for sales, you have to ensure that every level, every buyer in the market is waiting to buy from. That is your target because most cases price could just react off it. Even though the market might not really be changing direction at that time, you're going to miss out on a whole lot of trade because of the notion of, okay, I don't really think price is going to go so much down or something like that. But then again, it's quite important for you to know that anything can literally happen. You can't control how the market is. And so you will have to play smart and safe by saying, okay, I'm going to take my entry from this level. I'm going to take my exit from this level. And because of the idea of how I want to trade, it's going to be way more easy for me to like, okay, do this at a time, do that at a time and stuff like that. Quite simple. Okay. So moving ahead, this is what we'll be interested in buying for GBPJPY. Now, I'm not going to give the precise entry because most persons here would think, oh, he has posted an entry. Let me just take it like that because you could be trading different proprietary firm accounts. And then you might not know if the person also watching is trading the same account, like the same prop firm, and then you guys are blocked from copy trading. So that's why I always try to keep it discreet. You could always form your own entry from this. Now, somebody else could go as low as 10 minutes to refine the entry. For all I care, it's still good for you, right? You get a different entry. You could come back to 4 hours and then refine your entry again. Or you could go back to 55 minutes. That weird time frames I do use sometimes because most cases I'll see the reaction on a certain time frame that you wouldn't see on another time frame. Now, if I see this on this time frame, you see it's quite different. If I go to 50 minutes, then we have the black candle, which is this. All right. Now it could be like telling you that, okay, that is my bearish candle, red candle. Right. So I have that level marked out already. So the probability I'm waiting, price might just come back into this area aggressively and then mitigate that zone, push back up, and then we see this new level. Now for the first take, we want to target this high because this is an external liquidity. So you could actually wait for rates of previous liquidities and all that. And then you ask yourself, okay, what's the narrative of looking at this trade? Is there also a possibility of price reacting off this zone? There is. Market can literally do anything it wants to do. You just have to look for the best area. I like to buy at the most extreme, which most persons will call the edge, right? So if you're using this idea of, oh, premium and discount, which I don't really use, right? If you're using this idea of premium and discount, you want to also ensure that you have the full idea of taking 50% of the discount itself and then 50% of the premium itself, right? So you have this. So meaning if I was to trade, I would rather stick with taking entry from the extreme for shorts, and then from the extreme also of the demand, that's for discount at the bottom like this. All right. So why everybody just interested in taking from this level and then push it back up? You're just patiently waiting for market to either come back into extreme supply before you look for your entry back down, or you're waiting for price to come back into extreme demand before you look for entry all the way back up. So the idea is simple. Take your time to study. What do you think is likely to happen? How do you want to utilize the concept you have learned? Right? going to be several levels in the market you can take your trades from. Now you can look at this. Okay, this is a valid shift. Market actually changed direction in this case. Yes, valid. Also, is this also valid? Yes, market actually changed direction and then continue higher. Now price could use this area. Price could use this area. You cannot really tell. But for me, I always go with the extreme, like I said. So I want to see, okay, this is what market did previously. Market swept a certain level here, right? After sweeping this level, what am I interested in? I want to see how market is going to what? Push out. And then we see this aggressive movement to the upside. Okay, so we see this aggressive movement to the upside. Closes above with a bullish candle. Now, the moment this happens, I'm interested in the buys because now it has given us a valid confirmation. You could scale so low to any time frame of your choice, but I like to stick to higher time frame because it's more profitable and more reliable, right? Especially when I'm trading my range theory. So I don't really need to stress myself so much. If I'm looking at this, this is the first thing I'm interested in. I see how price reacted off this block, right? So, and where's that candle mitigation? Candle mitigated this area here. And then what do we see? We see that sharp movement to the upside, meaning we could have as well refined our entry all the way to this level, because sometimes trading is not just about picking a zone. It's more of understanding why you're taking that level. So what are the valid reasons you will say validates this structure? Okay. So it's as simple as that. It's not really complex. You just need to know, okay, I'm picking this area. This is what I expect to see in the market. The market did this also again. You see this range that was created here. Market just mitigates the range. Then what happens? Market mitigates that range, and then there's an aggressive buy to the upside. Okay, so it's same pattern over and over again. That's simply why I trade. But then the notion and idea in which I implement it is something that not everybody can have. I currently have a trade on gold that is running. Right, I have a trade on gold that is running, and this trade has been running for days now. But then again, if you see it, you'll be asking yourself, oh, how am I holding this trade this long, right? It's just my principle. I know what I'm looking for. I know the strategy I use. And what did I use for this? Is the same range theory. I just picked a level, like you can see. I just picked a level there, right? That's the range I was created. Then after that, put my entry. My stop loss is, I think it was about 81.2 pips, which I didn't really care about because since I was targeting over 3,000 pips, and currently it has done over 1,900 pips, and just waiting for market to do what? Continue pushing higher. It's as simple as that. Now, most cases, I like to stick to higher time frame. It makes the process a lot easier. Now, if we're going back to the GJ, now because you see how market is reacting this level, I'm not interested in it. I just want to see that momentum back to the downside, push up a bit, come back again. I don't really wait for confirmation. Most persons, after mitigation into their POI or area of interest, like they would call it, they want to wait for a confirmation. They want to see, okay, market did this, market did that. So I think it's time for me to buy. Now, most cases, they'll wait for something like this to print on the lower time frame. They want to really be sure that market is bullish. And then again, I'm asking myself, if you're not so sure, why then are you taking trades? Right? Because it's quite important to know what you're doing. It's more important to have the confidence to implement what you're doing. All right. So most persons wait for something like this before they can trade. They call it confirmation entry. I don't really believe in things like that, because I believe if you know what you're doing, you should take your setup the way you see it. Right. So they'll wait for something like this. And that's good for them. But for me, I don't really do something like this. I just implement directly. Just, okay, I've gotten my bias. This is what I'm interested in. I want to target this certain level. So that's what I'll be expecting. After this liquidity is taken off, I'm just interested at this level. So it's as simple as that. Nothing really complex. The way I trade now is so easy and so relaxing that I can literally spend 5-10 minutes on the chart and I'm done. I've seen what I'm looking for. I've seen where I want to target. I've seen where I want to take my interest from. And I don't really bother anymore. Right? It's as simple as that. So that will be all for this video. I decided to make a really sharp, quick video for you guys. And ensure you do subscribe. We're about to get to 3,000 subscribers. And I do appreciate you guys for taking our time to watch. More importantly, I always say you should share this video with your friends, so that every time they come across the videos, they are going to also learn a thing or two from what I've said so far and from a bit of the information I have. I do believe I'm not really vast in information, but then again, the little I have has taken me from this level to that level. And yeah, I'll be posting more often on YouTube, more videos coming in. And I think I do have vlog also that I'm currently editing them. I actually still post. So yeah, definitely more videos will be posted on the YouTube channel. So like I said, ensure you subscribe, comment, and share this video with all your forex traders friends.